Ladies and gentlemen, I welcome you all to the Q2 and H1 FY25 post-earnings conference call of Jyoti Resin Adhesives Ltd. Today on the call from the management we have with us Mr. Utkarsh Patel, Managing Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the quarter and half year ended September, the plan and vision for the coming years, post which we will open the floor for Q&A. Over to you, sir.
Thank you, Vinayji. Happy New Year to all our investors, and I hope you all are doing good. About the business, yes, quarter two, the result has already announced, and you all know that the market is as a little flat, and the demand was slow. But still, the festivals and the rainy seasons are over now. So for next quarter three and quarter four, the market is now very bullish for the building and construction materials. We strongly believe that. And about the raw materials are as soft as earlier. So there is no increase in the raw materials costing. So we can start for a question and answer.
Okay. Anybody who wishes to ask a question may use the option of raise hand, or you can put a question in the chat box. We'll take the first question from Madhur. Madhur, you can go ahead, please.
Hi, good morning, sir. Thank you for the opportunity. Sir, I wanted to understand when I look at our H1 numbers, we had highlighted that we'll sacrifice on the margin, but there would be a volume and the revenue growth that would flow into, but that hasn't happened. So why is that? And when can we see this margin reduction strategy that we are following to flow into our numbers?
Yes, Madhuri. So you are very right that that were the plans, but actually the market was very soft as we done the lots of effort with the team, and the demand from the tertiary level was very slow, and it happens to all the companies as the results are announced for all the companies now for the quarter two, and you have observed that we have observed that the demand was totally slow. So it will be very risky strategy. We thought that if we push the more material through to the retailers, to the distributors, then maybe the chances are to make that heavy debtors on that, and also the demand is not good into the ground levels. So it will be not a good strategy. So I thought we will cover into that into the quarter three and quarter four when the market will be the stable and in good positions. That is the reason that, but we have also passed some the discounts also. It's not like that we have not passed that discounts. We have made offers into the Diwali opening Murat for the 10-15 days also for the silver coins and etc. So it also gives us the good response for that. And so that's why we are able to at least cover the volume as per earlier.
Okay. So for FY25, what kind of top line and bottom line growth do we see for our business?
So as I mentioned, that was the plan for the 20% of volume growth. And as we have taken the volume growth in quarter one, 20% around, but quarter two, because of the rainy season and the festivals and the demand, slow demands, we just stay flattish. So for the quarter three, quarter four, we will try our best to achieve at least 20-25% of volume growth. So we can reach at least 15% of volume growth end of the year.
Okay. And sir, on the pricing front, do we see some kind of price hike or price realization growth in H2?
No, price is not any variations in the price. I think it will be flat for that. Yeah.
Okay. And sir, on the margin front, do we see margins to be stable, or do we see that they'll go, they'll reduce a bit, but that will be covered up in volumes?
So as I mentioned that we are planning to for the 3 to 4% for the sales promotion discounts or price reductions, we have keep it with our sales from this operating profit margin, and more 3 to 4% we want to invest in branding and advertising. So we have started that, and it is in the process. So it's not like that that amount is totally used in the current quarter, but we believe that the operating profit margin will be 28 to 30% around end of the year.
28 to 30%. Okay, got it, sir. Sir, just a final few questions from my side. Sir, we have highlighted that our ASP increased because of the share of premium product that has increased. Sir, so what percentage of our revenue would come from premium products versus our regular products? And sir, what would be these premium products that we have highlighted?
So that are the two products, Extreme 3 and Ultra 5 in 1. So that is 30-35% from our revenue. So earlier it was around 25%. So it is increased almost 10% for the premium product shares.
Okay, and 25% would be a year ago, or what would be when this would be 25%?
That I need to check exactly. That I need to check exactly. So I don't have the exact data for that. But if we talk about the last year, yes, it was around 22 to 25%, and now it is 35%. So it is gradually increased within last 2-3 quarters, we can say.
Okay, and sir, how are the economics for this product? So, what kind of from our if our regular product would be at a average selling price of 100, are these product how much higher are they? And on the margin front, how much excess margin can we own on these?
I cannot say the exact access what margin we are getting from the premium products, but I can say about the realizations value. It is around 8 to 10% category wise. So as an example, if I talk about our medium premium product WP2 in one, which is which we are selling the most, as I mentioned, the waterproof adhesives. So if it is in a 200 range, then the premium product will be 220 rupees around. And again, the most premium product will be 240 rupees around. So almost 8 to 10% gap between each products, we can say.
Okay, sir, got it. Sir, I wanted to understand. We have on our FY24 balance sheet, we have current liabilities that are unpaid expenses of 84 crores versus 81.5 crores in FY23. So what are these, and why aren't we debiting it into our P&L?
So that is basically provisional expenses created, and as we have mentioned in earlier calls, that these are the points and sales promotions offers we have made for the carpenters and the retailers. So these are mostly 80% is for the carpenter point loyalty programs, and 20% for the loyalty program for dealers.
Okay, sure, got it. Sir, just a final question. Sir, on a dealer level, sir, what kind of discount or dealer margin do we provide versus Fevicol so that our volumes grow versus our dealers?
So Pidilite providing almost 4 to 5% to the dealers, and we are providing 8 to 12%. Maybe it goes to the 13 or 14% as compared to the newer territory and the mature territory. So it is average 8 to 13%, we can say.
Okay, sir. Sir, got it. Sir, thank you so much, and I'll get back in the queue.
Thank you.
Thank you, sir.
Thanks, Madhur. We'll take the next question from the line of Shubh Shah. Shubh, you can unmute and go ahead, please.
Yes, sir. Thanks for the opportunity. Sir, I have two broad questions. First is, uh, can you break down this year's this quarters and first half volume growth and price change? I, as I understand, the ASP has passed on discount in this quarter, right?
Right.
So, like any directional number on the percentage price decrease and percentage volume growth for this quarter and first half?
So it's not a price decreased, but as announcement of the price remain the same. But we have run the different kind of sales promotions offers as per the festivals, as per the state wise. As we all know that the India has a different kind of mindset in each state. So we are running 14 states. So as our 5 states are mature enough and 9 states are still we are growing state, so we have use a different kind of strategies, but it will be very tough that I can give the details breakup for this, but as an example, we run silver coin offers into the Murat order for the Gujarat, Rajasthan, MP. For the If I talk about the UP and Delhi, then we went for the hard bags for the we tie up with the American Tourister bags for that. If we talk about the Karnataka, then we have went for the some gold offers like that. So it's a different strategies we use for that.
Understood. So on this front, taking from the previous question that ASP has overall ASP has increased, but still discounting has also increased in this quarter, discounting or incentives, if that's the correct understanding.
Right.
Understood. And sir, on the volume growth front, any directional number on Q2 and H1 volume growth? So in Q1 we did 20% volume growth for Q2 and H1 overall.
Q2 is a flattish, almost YOY.
Understood. And so last question, any comments on how did our core geographies and the new geographies do for the first half in this quarter? So core geographies are Gujarat, Maharashtra, etc., and the new geographies, North India, all of those things.
So for the quarter 2, actually what happens for the newer territory, actually we are getting good response into the quarter 2, but the volume is that are the initial stage and the volume is not much higher. So it doesn't reflect on the balance sheets. But as an example, if we talk about the UP, for the Lucknow is a big territory for us for the UP. But if I talk about the Jhansi, Varanasi, that are the smaller territory, but that smaller territory actually give us the 100% volume growth this quarter 2 as compared to quarter 1. So if I consider quarter 1 to quarter 2, because as an example, in Varanasi, we were doing 5 tons into the quarter 1, but this time quarter 2, we have done 10 tons. So it is volume wise, that is 100% growth into that territory. But 5 ton and 10 ton is not much volume all over, so it doesn't reflect much onto the balance sheets actually.
Okay, understood. Understood. And what was the volume growth in our core territories? It was flattish,
It is
if flattish for Q2.
for Q2.
Understood. Understood. And so in the Q1 in which we had like 20% volume growth, was it also driven by, flattish growth in our core territories and much higher growth in the new territories, or it was something else?
No, it is more into the core territory actually, because the volume is higher into the core territory. So
Right.
into the core territory, and also as I mentioned that in newer market we are getting good response and good placements are there now. Dealers are giving us the repeat orders also, as I mentioned, into the quarter 2 we get that response
Right.
in Varanasi, in Jhansi, in Lucknow. Uh,
And sir, the last question. So for now, out of roughly 12,000 tons of volume, what would be the proportion of volume that comes from new territories, and any guidance on that proportion going in the next 2-3 years, what that number could look like?
That is very tough to say right now, actually, because the growth will be come into the both territory. Because if I talk about the core territory, still there is a very big scope into that. As an example, if I talk about the Karnataka, we are doing good into the Karnataka, but if I talk about the market share, then it is only 15% market share we have taken yet. So it is we are more optimistic to grow this territory at least double from here. So yeah, it will be the mixed efforts together.
Okay, all right. Very helpful and clear. Thank you.
Thank you.
Thank you, Shubh. We'll take the next question from Harsha Banka. Harsha, you can go ahead, please.
Good morning, sir. My first question is why do you say you are second largest wood adhesive brand when Jivanjot sales, which is a Jubilant Industries brand, are more than Jyoti sales and both are in wood adhesive?
Okay, so I want to clarify that the Jubilant Organisms Limited, that Jivanjot brand had the epoxy adhesives and the white glue both categories, and there are so many categories into the epoxy adhesives also. So they are into the rubber adhesives, they are into the binders also. So it is a different, and they are into the lower quality segment also. So we have mentioned ourselves as a premium retail segment into the white glue. So that's why we are claiming ourselves in the white glue premium retail segments only, not for the economical grades or not for the rubber adhesives or for the epoxy adhesives.
Sir, thank you. And my second question is what about the capacity utilization ratio for H1 and expected utilization rate for H2? And is there any further expansion plans from your side?
Yes, we are almost getting our environment clearance within maximum 2 months. So after that, we can start to purchase the new boilers, vessels, reactors, cooling towers, etc. So we are planning to increase our existing capacity. So in brownfield, we'll go for the 5 to 10 crore rupees of investment in next 6 months. So the capacity after that it will be almost double from here. So we can, so we can reach at least 500 crore of top line with the existing plant. For that, actually, we require some storage to increase the storage capacity for the finished goods and the raw materials for that. So maybe we will plan a near space to our factory on the lease for that, and after that for the next investment we'll go for the greenfield for the newer plants and newer place, but it will be take at least 2 to 3 years for that.
Okay, sir. Thank you so much.
Thank you.
Thanks, Harsha. We'll take the next question from the line of Amit S. Amit, you can unmute and go ahead, please.
Hello, sir. How is the competitive intensity from other players? Like we are hearing that Pidilite is also quite aggressive in the market. How are you facing up to the competitive scenario?
Competitions we can say are more active since 2 3 years. It is not that nowadays they are active already. The competition was from the first day, but the thing is that they are also suffering with the demand and supply into the market. So quarter 2 was very tough for the all the companies. If I talk about the Astral, if we talk about the Asian Paints, if we talk about the Pidilite also. So this white glue category or any other building material construction products, it's a little tough to manage this revenue growth into the little less demand into the market. So yes, they are same active as per earlier, but what I believe that is a good thing I think happens to us, because now we are more aware, more active to save our market share. Plus, we need to grow into the newer states. We have to save our market share to the existing core states. Plus, we need to grow for the core states also. So we are also very active. We have recruited 150 people of team into sales and marketing last 1.5 year. So we are improving our CRMs, we are improving our ERP systems, we are recruiting the people into the admin and accounting back office supports. We have hired the training manager for that. The induction program is going on. Recently, we do our sales and marketing team the training program into Ahmedabad, and that is the second program actually done by us. Every quarter we are planning to do this. So these all are activities into the pipeline, and I think it is always it should be there, and it always make the organization more strong. for that. So yeah, we will definitely take for opportunity to grow more from here.
Okay, and sir, regarding your rewards point program, we see around rupees 90 crore liability for expenses in your liability side of the balance sheet. Is this similar to the 600 to 650 crores odd liability for expenses in Pidilite balance sheet? And how do you see this head behaving for you as you grow?
I think this will be not grow much from here because we have started some auto redemptions program also. Earlier stage carpenters were used to accumulate the points since so many years, 1 2 3 4 years, some a few of carpenters, and now we have started to motivate them. We are running the different type of attractive offers to make them decisions to redeem the points. So this type of strategies we have already developed and started, and we are more improving into that into our loyalty program. So it will not go much higher as per revenue growth. But yes, compared to the Pidilite, it is almost same that liabilities. That 650 crore liabilities what Pidilite has.
Yes, sir. Thank you for it.
Thank you.
Thanks, Amit. We'll take the next question from the line of Madhur Rathi. Madhur, you can go ahead, please.
So thank you for the opportunity once again. Sir, I wanted to understand. Sorry. Sir, we have highlighted that, sir, this 500 crore revenue can be reached over the next 6 months. Sir, so is this the reason why our revenue is stagnant in the 250 to 60 crore levels? And for this to inch up, we will need that capex to come in and for our capacity to double.
Sorry, I didn't get your question exactly.
Sir, so we are currently in the 250 to 260 crore level on our revenue basis, but the 500 crore revenue you highlighted that once our capacity doubles, that would be we could achieve that.
Right.
Is this the only limiting factor that over the next 6 months that when our capacity doubles, then over the next 3 to 4 years we can double our revenue. Till that time, till the next 6 months, it would be on the muted level.
So what happens? It's not much investment into the brownfield existing plants. So we want to be well prepared for that for the next 3 years of journey. And what happens in this B2C business? We are running our offers and quarter schemes as we have divided a year into the 4 parts. So every quarter, and maybe also we are some quarters also we are doing short terms 15 days 20 days offers also, like that I mentioned into Diwali we did the Shubh Murat offer for the 15 days when the new year came. So it's like that. So sometimes what happen, the sales goes high to that level that we require. As an example, in the last March 2024, we have done reached the almost 2000 ton per month. So that is almost utilization of the 100% capacity what we have right now. So that spike happened. So we want to be well prepared. So we didn't lose don't lose any market shares from that. So that's why.
Okay, so can we double our revenue by let's say FY28 to 500 crores?
Right. So we have the plan for the 27, and as quarter one was 20% of volume growth, so that was a very good quarter at that time, and we get the good confidence also for that. But the quarter two, as we have mentioned, that it was softer, and we have half year to cover. So we are very optimistic that we will cover to at least 15 to 20% volume growth this year also. So if we'll go with this pace, then it will reach in 2027 500 crore of top line.
Okay, and sir, in our presentation we have highlighted 20 to 25% volume growth. So this entire 500 crores would come from sir. So I guess around 300 crore we could achieve in FY25. So sir, post FY25. Sir, what would be the value growth and what would be the volume growth? Volume growth, I guess you have highlighted 20-25%. So what could be the value growth that
It
would
will
help us achieve?
be same, I think. Right now, no, not much any variations in the pricing. So we are assuming that the price will be so flat. So we are guiding for the volume growth 20%.
Okay, sir. So this premium segment that is 30 to 35% won't grow much, or this would be stable going forward.
That is very early to say something about that, because of course we are more optimistic to increase the more shares for the premium products. But the demand of the market, the perception of the market should be a little different every states. So a few states are more consuming the more premium products, but it's not like that every states are demanding for that, so it is tough to say specific on about that. Yeah.
Okay. Sir, a few questions from our balance sheet. Sir, why did our bad debts increase from 5 crores, 5 lakhs to 1.92 crores in FY24? And similarly, sir, what would be our receivables as on date that are more pending more than 6 months?
The first question was 5.
Sir, our bad debts increased from, I guess, 5 lakhs to 1.92 crores in FY24. So why is this a huge jump in that? And similarly, sir, what would be our debtors that are pending more than 6 months as on like H1 end?
So for the bad debts and debtors, it is always into the pipeline, and as you can see, that is below 1% actually. So we are assuming that we should stay below 0.5 or 1% between for the bad debts. So that provisions has done, and that is on the pipeline. So it is not like that we have a clear wipe off from the balance sheet, right? So it's provisions done for that, and it will be happens into the final balance sheet made into the March.
Okay, sir.
It is
And sir, yeah, sir, please go ahead. Sorry.
below 1% from the revenue, not more.
Okay. And sir, how much would be pending for more than 6 months out of the like the our balance sheet numbers, receivable numbers of each one? How much would be pending? So out of these 9,900 crores, sir, how much would be pending for more than 6 months?
So if I say about the percentage wise, it should be not more than point 3 or 0.5% max.
Okay, so only I would say like 30 to 50 lakh would be only pending for 6 months, more than 6 months.
The total revenue percentage. So if I talk about the 260 crore of revenue, then it's go to the 1 crore around.
Okay, so okay, got it. Uh, sir, and sir, just a final player. Sir, when can we become a pan-India player? And sir, is the Euro 7000 brand registered in the name of company or on in the name of promoters?
No, it is registered into name of the company from the first day, and all other category products like sub products we have also registered from the first day. And about the pan India presence, right now we like to penetrate more into the existing 14 states. Still, it's a huge opportunity and huge volume to cover into the 14 states. But if we get the good opportunity into the remaining states like Odisha, the Bhubaneswar, like Chennai or Kerala, if we find out good channel partners or good opportunity, we'll definitely look for that also.
Okay. So just a final like question I had come up. Sir, so I think in the furniture segment, if there is an increasing share of organized sector, that is the ready-made furniture or these branded furniture. Sir, how does this impact on our revenue over the longer terms? And sir, what percentage of our revenue would come from B2B versus B2C?
So right now it is 3% revenue come from the B2B and 97 from the retails only, B2C only. But yes, you are very right that the organized sector is growing. But if we go into the deep of this particular segment, then it is happenings only in metro mega cities. Where the main offices, furnitures, the workstations made into the modulars, if we talk about the modular kitchens, then upper segments in metro mega cities that happens into for the modular kitchens. So still the retail market is very huge, as 70% population still are in villages into the India, and they are migrating into the cities. So when they purchase 1 BHK, 2 BHK, max 3 BHK apartment, then definitely it's not the if we talk about the commercial aspects, it is not fit with the modular things because it will go to the higher for the that particular segment. So there goes with the trade segment only, with the carpenters, with the plumbers, or with the electricians, like of interior done, not like everything is ready made. So still it is a long journey for the India. As if we talk about the IKEA has came into India since 2015, so it is almost 9-10 years to that, but not much volume they have taken yet. So, but parallelly, yes, this market will not reduce from here. Definitely, this market ready-made will be grow in some phase. But we have also introduced our team and our product into the OEMs also, and we are recruiting more people for the OEMs to the into the metro and mega cities. And we are planning for the separate management, separate leaders for that, separate consignee and sales agent for that. So we want to take this market shares almost 10 to 15% to our revenue. But 75 to 80% will be remain into the B2C only.
Okay, sir, got it. Sir, thank you so much and all the best.
Thank you.
Thanks, Madhur. We'll take the next question from the line of Jatin Chawla. Jatin, you can unmute and go ahead, please.
Yeah, hi, good morning, and thanks for the opportunity. My first question is, how do you see the demand trends in the month of October and November? You mentioned till September things were slow, but with other categories, we have seen post-festive things have picked up. So how are you seeing things, and are you confident of delivering 20% kind of volume growth in the second half?
So for the October, the demand was also slow actually, during the Diwali time. But right now, market is picking up. So we have still 1.5 months, and right now orders are good. The demands are in the pipeline, and the things are moving towards a good way. We are optimistic for the at least 15% volume growth into the quarter 3.
Okay, got it. Thanks, that's all.
Thank you.
Thank you, Jatin. We'll take the next question from chat. It's from Ankit Kaushal. So his question is about expansion. He's asking, how will you do the expansion by way of debt or total cash accrual?
Can you repeat the question, please?
Yeah. So he's asking, how will you do the expansion by the way of debt or total cash accrual?
By the way of the debt and the cash approvals.
Accrual.
Basically, we'll use debt or we'll use our internal cash for capacity expansion. Hello? His line seems to have disconnected. I'll just answer on his behalf. The expansion will be done, any brownfield or greenfield will be done from internal cash accruals. No external debt will be needed. As you would have seen in the presentation, we are currently sitting on around 137 crores of cash and cash equivalents. We'll just hold for him to log back inside.
Yes, sir, you're audible.
Okay, please go ahead.
Sure, sir. So we'll take the next question from Chinmay and Nima. Chinmay, you can go ahead, please.
Good morning, sir. Hope I'm audible.
Yes, you are
Yes,
audible.
yes.
So just a quick question on the other current liabilities. Could you share? So in FY at end of FY23, this was 86 crores. At end of FY24, this is 88 crores. Could you share during the year how much is the addition to this number, and then how much was the redemption?
It was almost same for the last year. I think 3 crore rupees difference was there, right, Vinayji?
Yes, sir.
Basically, just trying to understand what is the churn in this number. So, how much gets added to this number during the year and how much gets redeemed?
The net addition or reduction will not be more than 5 to 10 crores on an annualized basis. Basically, the pace at which the points are getting created and redeemed, you will not see impact on turnover on an annualized basis of more than 5 to 10 crores.
But then, I mean, just trying to understand how old are these receivables? Basically, as Sir said that l- up- not more than 1% are greater than 6 months old. So does that mean that there's big churn in this number? So essentially, 99% of these liabilities get churned out over a 1 year period.
No, you
Is that?
mixed up receivables and liabilities in the same statement. When you talk
I'm
about
sorry, payables.
yeah. So liability for expenses, typically today we have a 3-year redemption program, but some of them may be slightly longer, but these are the old ones. But as we go ahead, we are trying to churn it out faster. So the pace of creation versus redemption stays neutral on the company's balance sheet.
Would it be possible for you to provide the breakdown as to what's the aging schedule of this?
No, we don't do that. We can't give that. But if you see last year's notes to accounts to the revenue, the net impact on the turnover was only 2.9 crores.
Okay, all right. Thank you.
Uh, Thanks, Chinmay. We'll take the next question, the follow-up question from Shubh Shah. Shubh, you can go ahead, please.
Hey, hi, this is Chirag. Sorry about the incorrect name. This is Chirag. Thank you so much for the opportunity. Just wanted to ask one question, Utkarsh ji. If I look at the large listed global peer, right, in their consumer and bazaar segment, they did end up in this quarter also having sort of a mid-single digit, little higher than mid-single digit volume kind of growth. So my question is there anything concerning in any of our geographies where you think there is minor, even if it's minor market share loss, or if there is minor loss due to we are not not present in the right segment, sub-segment. Just wanted to know if there is anything, or is this just a quarterly blip?
No, I don't think so that that market will go more from here, because this is a trade business, and the traders, the retailers are very much involved into the markets. So we want to stay with this segment only, and parallelly we will increase our modulars OEMs categories also. So, but not for the consumer bazaar market you are talking about.
And then the difference is largely because I guess the unseasonal rains were more in the geographies that are core to us, and whereas for the large listed peer, that was more spread out across India. Is that a possible explanation for the difference? Because we were flat and they were up 7%.
For the 7% you are talking about whom?
Pidlite.
Very right. Yeah, but see that I mentioned earlier cause that that is 870 products they are manufacturing from the different plants, and they have the created a huge category. So like paints, the building constructions materials, epoxy adhesives, binders, and white glue also. So it is very tough to say about that white glue segment. But as per my knowledge, the white glue segment is almost flattish for the Pidilite also.
Especially in our geographies, in our core geographies, you mean?
Yes, because they have sees that they have do the acquisitions of the Araldite also in 2020-19 around. So that is also a very huge network for that epoxy adhesives range. So that is all over, all put together with the 870 products and 6,100 SKUs. They are onto the 7% of growth. So it's very tough to say for the particular product wise.
Understood, sir. And on the new geographies, you said that the traction is good. Any geography that you can point out which is doing better or worse, or Is it broadly very similar across the new geographies also, the traction? Even though their volume contribution is lower, we understand that, but just in respect to their own past, anyone doing much better than expectation, much worse than expectation?
UP is doing good actually, and we are getting the good response as we have expected. As a UP market is little, the market there, they are eager to attract a regional brand, and if we do the good customization, do the good ease of doing business policy, they always welcome kind of brand. But Delhi actually a little tough for us, what we have expected. So Delhi is not doing much that, but UP is doing good. And also we have entered into the Punjab for the different Chandigarh also, Patiala also. So the response into the Punjab is also good for that.
Understood. And UP can be as big as Gujarat, Maharashtra.
Yes, of Yes, of course. So we have a big plan. Right now, we have a team of almost 30 people, which were into the last quarter, actually 22 people. So more 8 people are on board in a UP now. And still we are planning for the at least double the team from here. So maybe it will go to the 60 persons of sales and marketing team we require into the UP.
Understood. Thank you so much for the time.
Thank you.
Thank you, Chirag. We'll take the next question from chat, which is from Gunit Singh. He's asking, what are the primary reasons for the increase in margin from approximately 20% to the current 30 to 33%? And is it due to lower raw material prices? Also, can the 30% plus margins be sustained?
So it is from the lower raw material cost also. And as we have increased the premium product market share, so it is both together.
And he's asking, can this 30% margin also be sustained?
Yes, this year will land with the, I think, 29 to 30% of margin. Above that, I think not lower than that.
All right, sir. Thank you.
But if I say about the longer term, in earlier call also I mentioned, for the longer term we guide our investor for the 22 to 25% of EBITDA.
Okay, sir. Sure. So we'll take the next follow-up question from Madhur Rati. Madhur, you can go ahead, please.
Sir, just one question, sir. How many SKUs do we have? And sir, what would be the smallest pack that we sell, or are we selling only bulk packs?
We have 125 gram and 250 gram packs also. That use is very less used by the carpenters. But the size we can say that 500 gram to 1 kg, 2 kg, 5, 10, 20, 30, 50, and 60. So 60 is the biggest pack size.
Sir, so majority would be bulk, I guess.
Majority will be bulk. So from the 5 kg to 60 kg is almost the we can say. So 5, 10, 20, 30 is the same, and 50, 60 is the same in our total volume.
Okay. And sir, how many SKUs do we have currently?
Around 65 to 70 SKUs.
Okay. Sir, just a final question on the margin front. Sir, this 22 to 25% margin, sir. So we highlighted that 3-4% would go to discounting and 3-4% would go to advertising. So these margins would come in FY27 only, or like over the next 5 years, gradually will keep on adding these advertising efforts as well as discounting efforts to
Yeah.
dealers?
I understand your question. It's a gradually happens basically. So right now, in a quarter two, there was no meaning to make invest in advertisement, because as was the market very down at the time, so it was no meaning for that. So right now we are starting for that. So gradually it will be go to the this Q3, Q4, then for next year Q1, Q2, Q3. So gradually we'll increase that into that. But we have hired the agencies. We are into that. Maybe you all have seen our Diwali video also earlier, that we have made the carpenter video in the Holi also. and we do the promotion on the digital platforms, social media marketing, running very aggressively into the carpenters are into the Facebook more as compared to Instagram. So we are targeting the Facebook audience also for that, and YouTube also. So it is already started for that.
But we can see this moving over the next 3 years
Next
to these levels.
next 3 years, yes, we can say it's a gradually will happen. So that, but from the next year, I can surely say that that advertising and branding will be the at least 3 to 4%. That for sure.
Okay. Okay, sir. Got it, sir. Thank you so much and all the best.
Thank you.
Thank you, Madhur. We'll take the next question from chat from Bharat Gupta. So he's asking, what are the key challenges faced in Delhi market? Why, despite getting more discounts, we are yet to make a mark? And second question is asking is, what's the roadmap for gaining traction with OEMs?
So for the Delhi, the challenges is the right now the team and the channel partners only, and we have not do as much as effort, we can say, into the Delhi as aggressive to find the good channel partners and team. That is the challenges, and the new product is as so acceptability is always tough when you enter into the new market, and Delhi is little premium market. The second, what was the second questions for the?
It was, what's the roadmap for gaining traction with OEMs?
Right. So for the roadmap, right now we have targeted for the metro mega cities. So in Mumbai, we have a good team, different channel partners for the OEMs, and we are getting good response. So almost from 3% revenue, what I have mentioned, that is 2% revenue is coming from the Mumbai only. And we have started the plan for the Telangana, for the Karnataka, and for the Gujarat also. In Ahmedabad, we are getting good response into the OEMs, and we are increasing the number of dealers into that. In Pune, we have increased our number of dealers into that, and we have hired the separate team for that. So if I talk about the brief of the roadmap, then we'll go for the separate team managers for this, and that is in the pipeline. So I think we'll recruit more than 50 to 100 people into the OEMs in the next year.
All right, sir. Thank you. So we'll take the next question from Chinmay Nema. Chinmay, you can go ahead, please.
So just a quick follow-up on my previous question. So just want to understand on the asset side, what is the counter entry corresponding to the other current liabilities?
Receivable cash on the books.
It's cash on the books, right? So basically, as these are paid out, it'll reflect in our cash balance.
No, I said receivables and cash on the books. It's both.
Receivable, understood.
Thank you, Chinmay. So we'll take the last question from the chat box from Guneet. He's asking, what kind of growth are we looking at for FY26?
So FY26, we are targeting for the 375 to 400 crore of revenue.
All right, sir. Thank you. So since this was the last question, okay, so we'll take one more question from Rishabh Botra. Rishabh, you can go ahead, please.
Hello, sir. Good morning. Just wanted to understand, you elaborated on your expansion of capacities and expansion of widening of distribution network. Can you please let me know what it is now and what will be post the expansion?
Post expansion means you are talking about the brownfield, what we are going.
Yeah, both. In case if there is any greenfield as well as brownfield expansion, what will be the capacities which will be having?
Okay, so after brownfield, 10 crore rupees, will double our capacity from here. So almost 4,000 ton per month, we can say. But for that, we are assuming that for the plant and maintenance, the efficiency will be the 85 to 90%. And so if I talk about the revenue wise, then it can go to the 400 to 500 crore of revenue with this brownfield investment. And after that, when we are going to plan for the greenfield, that the investment will be done almost 40 to 45 crore around, and it is all put together: land, plant, building, machineries, packing machineries, etc. And that can go over the almost 1200 crore of revenue.
Sir, with respect to brownfield, when will be having this available for commercial production expanded capacity, and by when will the greenfield come up? I wanted to get a sense the revenue amount which you mentioned will be available from which financial year? Is it 27, 28? How is it?
No, it will be available into the, so we'll get requirement. Uh,
So your voice is not audible slightly.
I'm audible now?
Yeah, better.
Yes, sir.
Better. So by this investment, we'll get the environment clearance approval within 2 months. So after that, we'll start to purchase and install the vessels, reactors, etc. for that to the existing plant. So within 6 months, we can say. So we can say by June or July month of next. So from 6 months from here, we will be able to have the total capacity of 500 crore of to generate the 500 crore of revenue. And for the greenfield, we'll start to look for the land. We'll purchase the land, then it gets the 1.5 year to get the environment clearance approvals. Then the 1 year time for the building constructions, everything. So it will take almost 2.5 years of total plan from here. So we can say in 2027-28 we will be ready for the new plant for as a greenfield.
So just to brief, before this call, I started looking at for 2 quarters, and my concern was that market is growing, why Jyoti is not growing. So hearing these conversation, I believe that your growth path momentum will be strong and good enough. Lastly, the distribution network, if you could let me know what it is now and how are you expanding that and in which geographies. Thank you, sir.
Sure. So if we talk about the branches, what we are working with, so that was 28 branches last year, and right now we are on the 38, and more 4 branches are into the pipeline, so it will go to the 42 branches. So we are already on the way that to establish our consignment sales agents, channel partners for the strong distributions. Then, as I mentioned, that in December 2022, so beginning of the 23 January, we can say we have 250 people of team into the sales and marketing, and right now we have the team of 400 people. So we have recruited almost 150 people into the 1.5 year of spam. So that is also in the pipeline. I believe, and we have planned for the next 1 year also. From here, next 1 year we'll recruit more 100 people into the sales and marketing, includes the OEMs team also. So we are into the development to set our channel partners, to set our team to grow from here.
Can I ask one more last one? I missed out asking. So in terms of the product category, there are other players also, likes of Pidlite, Astral. What is unique of our product and why customer wants Euro brand? I am sure Euro is a popular name. And in terms of marketing, is it we are also touching base with the influencers, social marketing, or how are you taking it that on that front?
So it's actually a long answer for the questions, and it is but brief, if I can say that it is all about the efforts of the 17 years, and it's a very micro management we did. And yes, you are very right to the influencer. So we believe we take the responsibility on our shoulders at the tertiary level. So as an example, if we talk about the newer states, if we talk about the UP right now, so we have taken the total responsibility of the pool of the material from the retail counters. We are giving the guarantee, we are giving the commitments to them, and Euro is always with a promising brand. What we have promise that way we have always over delivered to them. And because see, no any business can uh, be profitable without the repeat customer base. And the repeat customer base will be only because of the, if your product is good, your quality is good, your service is good, and your commitment is as you deliver as per your commitment. So these all are the factors what we have done till the date since in 17 years. Our inductions program, our training program, our recruitment to the team, the members, how we recruit, the what culture we have made. So it's a lots of all the effort together. We are getting the good response as compared to, I cannot say that as compared to Astral or Asian Paints, but because they are into the primary sales more, they have acquired the multiple businesses right now. They have already the distributions network, so they have made them the distributor and primary sale done by them. But we are focusing on to the tertiary level, and that's why that profit margin we are getting and the repeat business. Maybe the revenue wise, maybe we are flat into the quarter 2, but it's not like that we have not made a good profit. The profit numbers are good. So this is all the 360-degree efforts.
Thank you, sir. Thank you for the details explanation. And my objective is not never looking at quarter to quarter. It's a longer term horizon. Hope to meet you soon. We'll connect with Vinay and fix up meetings.
Appreciate. Thank you.
Thank you, Rishabh. So this was the last question for the day. I now hand over the call back to Vinay, sir. Over to you, sir. Thank you.
Thank you, sir. Utkarji, would you like to give any closing comment before we end this call?
Yes, so we are keep looking forward, and we are optimistic for the new challenges. And it is always good to take the challenges that we can grow more and build a strong foundation, strong organizations. And we are looking for more people to recruit. We want to expand into the existing core states and go deep into that also. And your supports and wishes are with us, so we'll try our best to make our commitments fulfill into the market. Thank you very much.
Thank you. Thank you to the management for joining us for the call and giving us the valuable time. Thank you to all the participants for joining on the call. This brings us to the end of today's conference call. Thank you so much.
Thank you.